All right, I've been thinking about diversification quite a bit lately, and I know one of the common questions when you're first new to single stock investing is how exactly can I know I'm diversified properly? And I recently just did a video about diversification versus concentration, and I'm an advocate of concentrating your investing. But you do want some diversification. So, of the diversification that you do, how can you know how to diversify properly? I'm going to talk about those factors in this video. All right, so the first thing that I think about is the general principle of diversification is lost when we start investing in index funds or mutual funds that accumulate a whole lot of different companies that are viewed as acceptable, safe, good companies, when often some of them are pretty much carbon copies of each other. For example, do you own Home Depot in one of your index funds? Well, do you also hold Lowe's? Those are different companies, but they're virtually a carbon copy of each other. Why not just own one, pick the one that you think is the best, and move on? You could almost say the same thing about Coca-Cola and Pepsi. Now, people that own Pepsi hopefully would know that Pepsi also has snacks like chips and things like that they sell. But the companies are very similar. They operate in a similar space and they offer similar products with similar margins. They're not that diversified. So owning both of them, does that really protect you a whole lot? But there's even better examples. Think about airlines. How many of us have owned a mutual fund or an index fund at some point in our life that have many of the following airline stocks? And I'm actually going to read it because there's just too many. But the ones that I picked that are very well known are American Airlines, Delta, Southwest, Alaska Air, United, Hawaiian, Spirit, JetBlue, all these different airline stocks. Are you really getting diversification when you own a little piece of each of these? Or you could consider oil stocks if you still invest in oil stocks. Even though many of us believe that electricity is the wave of the future and the energy of the future, do you own Exxon and Shell and BP and Chevron and Occidental Petroleum and Phillips 66 and Marathon Oil? Do you own a little piece of all of those in an index fund? Is that really offering you true diversification? So if you're going to follow a similar principle I do and try and concentrate your capital into the fewest number of stocks so that you can really get a solid understanding of your companies and really follow the news with those companies and really focus your capital on your best ideas, your best investing opportunities, then you want to make sure out of the 10, 12, 15, 20, however many stocks you do invest in, that you are diversifying at least somewhat. And so not only should you think about the different companies, the way I just listed several of the companies that are in the same category, but there are some other factors to consider as well. And you don't have to diversify in every one of these ways, but you should at least consider it. It should be something that's on your radar. Another factor to consider as far as diversification is the size of the company. Over time, you will see that the market reacts in ways where it's either benefiting or punishing companies of a certain size. So if you're invested in all the big mega cap stocks, your diversification is somewhat limited. You should consider, are there any large cap, medium cap, small cap, or even micro cap stocks that would fit within your portfolio, that you could learn about those, you could research those, find something that you really believe in, and spread out some of your volatility, some of your risk by investing in some different sized companies. Another thing to consider is the type of business. And yes, we kind of talked about that when I was naming the different names of companies, but it's still very easy for people to feel proficient and interested in a certain category and then stick all within that category. So maybe you're a dividend stock investor. Well, you will find that there are only a few industries where there are a lot of companies that pay a dividend. So maybe you need to think outside the box a little bit and actually go looking for companies that you believe in that are a different type of business. While I really like innovative, technologically focused companies, I don't want all my companies to be that way. So I find companies that I really believe in that are much different. Like, for example, Crocs. That's completely untied to anything that is considered innovation or technology. Or I usually like to have at least one restaurant stock that I own. So in the past, I invested in Chewy's, which is a Mexican restaurant. What does that have to do with innovation or technology? Those kind of decisions are giving me some actual diversification from the rest of my portfolio by spreading out into a different type of business. And then a final factor that I consider when I'm looking at my own portfolio is geography. And that really means, of the companies that I hold, where are they making their revenue? Where are they getting their business from? So not only do I want to hold some internationally owned companies, but some of my companies do business around the world, and that offers some diversification as well. But I often like to consider, am I owning more than just American owned companies? I'd like a little bit of diversification in that way. So again, you don't have to diversify in every one of these ways, but it is smart to at least think about that, because when you're holding a short list of stocks, a small number of companies, the volatility can be really brutal to hold through. So it may do you a lot of good mentally, I guess, to diversify in a meaningful way. I hope that helps, and until next time, have a great day. Wow, it's so windy, it's almost knocking the camera over.